Hi, it's Anthony Meisner with Land Title. Came to bring your Greater Metro Denver update for the month. Let's look at what's happening here, and there's been some really unique changes. One thing, sold numbers really fell off, probably a lot more than we were expecting, down about 15% year over year. So that was one that kind of took us by surprise. Now, clearly that came from under contracts in December, but look at the under contract numbers. Good sign is we're up 5% year over year. Active inventory really isn't that far off of where we were this time a year ago as well. So what's happening, right? If we kind of unpack it just a little bit, we're at 7,800 units in the marketplace right now. So clearly we're in a rising inventory market as you're going to see this. Lots of new homes will come to market, but with increased buyer activity, maybe some of that is curbed just a little bit, but definitely still more sellers in the marketplace than buyers. Now, Jefferson County definitely has the most new active units of inventory on the market comparatively. 22% up above this time last year, where Adams County is 8% up, Denver's 8% up, and then the lowest being Arapahoe County with actually 6% less inventory than last year. Now, new listings. So this is new listings coming to market, not all listings, right? And we did see an increase in seller appetite, right? 4,300 homes came to market last month, a huge increase from the previous month, 158%. Clearly, people took a break in the January market and came back in force. So that's interesting to see. Douglas County had the most new listings come back on the market as far as percentage change. That's interesting to watch, but Denver clearly has the most inventory, right? 1,150 new units came to market in Denver Metro or in the Denver city area. Okay, let's break it down by price point. This is also super important to know. What you're seeing the most of is you're seeing a decrease in the $3+ million sales, but an increase in the $2 to $3 million sales. That tells me people are getting a little more realistic on their price if they want to get stuff sold. There's still a lot of inventory out there at the higher price ranges, but where we're seeing a slowdown is still 500 to a million, right? That part of the market is just not operating like we've been used to seeing it. So we are seeing a slow start to the year there, but a much bigger increase in those, under $500,000. So that's not great because the bulk of our median is, 6 to 800,000 in total sales, where that's the bulk of the houses on the market. But it is a little bit of a transition we're not used to. The attached market is clearly just suffering. Not as many buyers taking place in this marketplace year over year in most of these markets. We're talking 25% drop in sold units. So it is definitely slower there, and it is a tougher place to get products sold. Definitely seeing active units increase, especially in that 800 to a million range, or of course the super luxury over $3 million attached product. Okay, so what does this mean? It means detached single-family homes month supply of inventory is at really low levels right now, but it will be rising throughout the year as it does, right? This is the slowest time of the year for that. So we're sitting only in that 1.5 months of inventory for our median sales price. And what that means is there's just not a lot of homes on the market and buyers have come out early. So when you hear things about multiple offers, the best homes are experiencing a constriction in inventory and more buyers than there are homes. Now, this isn't going to last for very long, but it's really important to note that that's happening right now. Even up into the 2 to 3 million mark, we only have 3.6 months of homes right now. This should skyrocket in the next few months. So be careful when we look at this and there's 18 months of inventory over 3 million later instead of 6. Don't be surprised, right? So timeliness with those new listings coming to market is key. Now, it is taking a little bit longer to sell stuff right now because most of the stuff that's sold has been sitting on the market over the holidays and it's finally coming off the market. So you can see that 60, 70, 80 days on market range is pretty normal for a detached single family home. Now, if we look at the attached market, we are starting in a very different world where this is easily the lowest inventory you'll see of the year. And we're only in the high threes. So 3 to 4 months of inventory, 4 to 5 months of inventory if you get over 800,000. And then clearly the luxury market has, quite a bit more than that. But this is really unique because we are going to be in another very, very difficult seller's market here. And buyers are going to absolutely have all the buying power and they're going to make all the decisions in the attached market. Plus, since there's not as many buyers, it's taking minimum 75 days on average to get under contract basically at any price range. So that's a tough one. Okay, let's look at solds because this really tells some of the story too. Year over year, detached single family homes, very similar to what we saw in 23 and in the beginning of 24. Last year, we obviously had a little bit of a bump, better sales activity, but we're still right in that line with kind of that baseline market where we have been for the last 3 years. Unless we see a significant change in buyer behavior, this is where we're going to be, right? So that's going to continue to happen. The real issue we've been having is this erosion in sales in the attached market. We're down 25% year over year. We went from 600 to 450 sales. This is way lower than we've seen in the last 3 years. So keep your eye on the attached solds. This is a tough market right now. Okay, let's talk about sales price. This is one where we're all having to have some harder conversations right now, but really, it seems like it's been fairly stable. It's starting to get a little rocky in the 25 year, and here we are starting the year, 2.8% below where we were before. It's not in all markets though, but places like Broomfield definitely selling a different product, a home, but it was down 15%. Elbert County, different kind of home as well, up 13%. But you can see across most of these markets, Adams County, a 2% increase in price, Arapahoe, a 2% decrease in price. Denver Metro the city of Denver saw a 3% increase in sales price year over year. Jefferson County, minus 1%. So it kind of depends where you're at, right? But detached single family is fairly stable. Now, the attached market has clearly seen a lot of erosion since the 23 market. So now here we are, just keep chipping away at this. We had a good month, so it was up 1%, purchase price wise compared to where we were a year ago. But if you look at the trend of that line, we've definitely seen price erosion in those marketplaces. Adams County saw a 9% drop in their average sales price. Jefferson County, 3% drop. So kind of keep that in mind as things, as you're working with listings, we definitely need to be helping our sellers figure out the price correctly. And it may not be where the comps are. Okay, percentage list to sale price. This one's a tough one because it doesn't include price drops and it doesn't include concessions. So it's a tough metric to measure. But with all of that being said, it does tell us one very specific thing. And one clear thing is it's measuring how much easier it has been for a buyer than it has been in years past. So compared to this time last year, 0.5% less of an offer, right? So 98.1% instead of 98.6%. It tells you that buyers have more power in the marketplace. So that being said, this is definitely the lowest we've seen in a while. This is just a measurement of, how much buyers really can negotiate. Now, if they're getting concessions on almost all deals and we're seeing price drops in the marketplace taking place as well, we definitely will see this change, but it is a very tough one. So this should be the lowest for the year. Usually it tends to trend up from here if you look at the seasonality. So that's helpful as well. And if you're working with sellers, don't panic. The next few months, we're really going to see this start to rise. But you definitely want to be in the earlier half of the year if you can as a seller based off of the data. Now, if you have any other questions, concerns, please reach out to me. I'm Anthony at Land Title. Don't forget to like and subscribe to the channel. We'll see you next time.